Welcome to Tax File. I am Lori Bala Hassan, your host, and today's episode is filled with rich insights you won't want to miss. We'll start with a roundup of the latest tax news, keeping you informed on the most relevant updates. In our Did You Know segment, we'll reveal some useful tax facts. You'll also hear from the public in our Vox Pop segment as we capture diverse opinions on pressing tax issues. Then we'll break down those perspectives further in the Knowledge Zone, offering clear explanations and deeper context. Our Professional Insight segment brings in expert voices to help you make sense of complex tax topics. And to wrap it all up, What's on the Net features your questions and comments from our social media platforms with our responses. It's going to be an enlightening journey. Let's get started. And now, the news. To stop revenue leakages, which has characterized the solid mineral resources sector for decades, the Nigeria Revenue Service and the Ministry of Solid Minerals Development recently held a stakeholder sensitization workshop to streamline and regulate operators within the sector, upholding transparency amongst other burning issues. Mariam Jode Adura has the reports.
To unlock the sector's full economic benefits to the nation, the Nigeria Revenue Service and the Ministry of Solid Minerals Development is collaborating to formalize the sector and reduce leakages. The stakeholder engagement, described as timely and strategic by the Executive Director of Finance and Corporate Services, Mohammed Lawal Abubakar, who represented the Executive Chairman of the Nigeria Revenue Service, Zak Adedeji, said the reform has brought clarity and an avenue to formalize the solid minerals sector, which has been ignored for so long. He reiterated the commitment of the service in partnering with the Ministry of Solid Minerals to reach the shared goal of streamlining the operations of the sector by securing legitimate operations and ensuring transparent, traceable transactions.
The NRS remain committed to working closely with the Ministry of Solid Mineral Development and all relevant agencies to ensure that operators clearly understand their obligations under the new regime, while also benefiting from a more streamlined and technology-driven administrative process.
Minister Solid Minerals Development Henry Dele Alake said the sector has the potential to substantially contribute to the country's GDP with improved regulations and enforcement. He said the reform has created a conducive environment for miners to thrive, urging that insecurity should not be an excuse for the sector to remain informal, as the government has provided and is still providing mineral marshals to secure registered mining sites and close down illegal ones.
These stakeholder engagements is to further create that platform where we can hear from you, share your concerns, express your views, offer suggestions and recommendations to palliate policies wherever possible.
He commended operators for their presence and urged them to participate, make meaningful contributions, and give feedback.
I want to commend you, the operators, for finding the time to be here. And I want to commend the Ministry of Solid Minerals and the NRS for putting this together.
Executive Director, Government and Large Taxpayers Directorate, Amina Ado, said the sector has operated outside the formal frameworks, fueled by illegal authorities and international syndicates, thus contributing a small, insignificant fraction of revenue.
Since the 1st of January this year, by the tax law signed in June 2025, the collection of mineral royalty and other fees in the solid mineral sector has come under the purview of Nigeria Revenue Service. The Nigeria Revenue Service is ready for it to partner with the ministry.
Earlier, the Group Director, Non-Tax Revenue Group, Hawanana Ibrahim, and the Special Advisor to the Minister of Solid Minerals Development, Amira Waziri, while setting the context for the engagement, highlighted the fact that critical minerals are reshaping global systems.
The Nigerian Mining Cadastre Office has been reformed and has made major strides in transparency
Hundreds of dormant and defaulting licenses have been revoked, ending the speculative holding of mineral titles by those with no intention to work with them. This aligns directly with the mandate of the NRS. Second is security. A dedicated enforcement effort through the mines marshals, working alongside other security agencies, has moved to curb illegal mining and to protect legal license operators like we've never seen before.
Stakeholders and participants said the event was insightful as most of their questions were responded to.
After the new act was enacted and it came into being, people are not aware of what to do. So it became important that both agencies must meet, have this engagement and invite all the stakeholders so that people are abreast of the payments, the processes, and who they are supposed to make payment to.
Formerly, the ministry is the one collecting royalty through remitter. But now it's going to be transisted, moved completely to NRS, as the Nigerian Revenue Services. So that is why we want the stakeholders to be fully aware of it, that these things has come to full implementation.
We appreciate government policies trying to streamline this tax remittance, which is in furtherance of development in the mineral sector.
Through the reform of the President Tinubu, we foresee a situation where this sector will contribute more to the GDP of this country.
So all of these have built up investor confidence, and that also, of course, translates into more revenue, into increase in GDP. Our own aim is to ensure that the solid mineral sector beats the oil sector at the end of the day.
The engagement had as its theme, from resources to revenue, aligning solid minerals operations with the 2025 Tax Reform Act.
The Nigeria Revenue Service and the Nigerian Upstream Petroleum Regulatory Commission have reaffirmed their commitment to closer collaboration aimed at strengthening domestic revenue mobilization and improving coordination across key government institutions. This follows a courtesy visit by the Commission Chief Executive of the NUPRC, Mrs. Orishemeiwa Eyeson, and her delegation to the NRS corporate headquarters, where both agencies discussed areas of mutual interest and cooperation. Aisha Abdelkader reports.
During the engagement, Executive Chairman of the NRS, Dr. Zach Adedeji, stressed the importance of professionalism, accountability, transparency, and integrity in public service, commending the NUPRC leadership for upholding these values. He also addressed concerns about possible overlaps in institutional responsibilities, clarifying that the NRS has no intention of encroaching on the Commission's mandate. According to him, each institution must remain focused on its statutory responsibilities to achieve optimal outcomes for the nation. Dr. Adedeji further reiterated that the NRS remains the sole agency legally empowered to determine allowable expenses for tax purposes, while royalty payments continue to be recognized as deductible expenses in calculating taxable income. In her remarks, NUPRC Commission Chief Executive Mrs. Orishemeiwa Eyeson thanked the NRS leadership for the warm reception and for promoting a productive working relationship between both institutions. The meeting underscored the growing importance of interagency cooperation in revenue administration, particularly in Nigeria's extractive sector, which remains a major contributor to government earnings. Both organizations expressed confidence that stronger collaboration, improved information sharing, and sustained institutional coordination will support more effective revenue generation and contribute to Nigeria's broader economic development objectives.
The Federation Account Allocation Committee, FAC, has shared a total of 2.257 trillion in April 2026 revenue among the federal government, state government, and the local government councils, reflecting a significant increase in revenue generation across key sectors of the economy. Evelyn Shija has the reports.
The Federation Account Allocation Committee, FAC, approved the distribution of 2.257 trillion naira as April 2026 Federation account revenue to the federal government, states and local government councils. According to the FAC communique, the distributable revenue comprised 1.260 trillion naira in statutory revenue, 747.88 billion naira from value-added tax, and 250 billion naira in augmentation. Out of the total allocation, the federal government received 787.351 billion naira, states got 772.36 billion naira, while local governments received 540.152 billion naira. All producing states also shared 157.254 billion naira as 13% derivation revenue. FAC disclosed that gross revenue available for April stood at 3.184 trillion naira, with statutory revenue rising by over 678 billion naira compared to the previous month. VAT collections also recorded a substantial increase of over 142 billion naira. The committee noted improvements in companies' income tax, capital gains tax, import duty, oil and gas royalties and VAT receipts, indicating stronger revenue performance and enhanced fiscal inflows to the Federation.
And that's a wrap on the news. Let's join Mariam on the Vox Pop segment.
Hello and welcome to the segment. My name is Mariam Julie Adura. Have you ever wondered what the punishment is for using a weapon while carrying out a tax offense? Come.
Anybody that commits offense while carrying a weapon is liable to 5 years imprisonment.
For me, any of the person that approach me, one of the people that are collecting the tax, if they approach me, I don't need to follow them with violence. They are doing their work, but I'll explain to them why I will not pay.
You see a hungry someone, a hungry man, and you not go and ask the person about tax. You know, a hungry person is an angry person. The person can bring out something to defend himself.
I think the person that carries a weapon should be penalized, and the penalty should be maybe imprisonment.
Although me, I'm not a terrorist or anything, but I think it's government to know the penalties to give them. If it's life imprisonment, it's fine.
Based from the experience, I think the person should like 5 years imprisonment.
Okay, you said experience. Do you know somebody who was?
Based on the discussions I've had some other people's, I think it should be like 5 years or thereabout.
Did you know any person who is armed with an offensive weapon while committing an offense under the Act commits a serious offense? For more information, please visit www.nrs.gov.ng.
Ashu Abe takes us on the Knowledge Zone.
Hello and welcome to Knowledge Zone, where we dive deeper into the interesting conversations had on the streets. I remain your host, Ashu Abe. On today's episode, we'll be talking about what punishment applies if someone uses a weapon while committing a tax offense under the new tax law. Under Section 116, subsection 1 of the Nigerian Tax Administration Act 2025, any person who is armed with an offensive weapon while committing an offense under this act commits a more serious offense and is liable upon conviction to imprisonment for a term not exceeding 5 years. Where the offender, while armed with an offensive weapon, causes injury to an officer or authorized officer of the relevant tax authority in the course of performing his official duties, the penalty increases significantly. In such cases, the offender is liable upon conviction to imprisonment for a term not exceeding 10 years. Over to you, Laurie.
And now to our Professional Insight segment.
As enshrined in the Nigeria Tax Act of 2025, the act is being developed by many scholars, financial experts, tax experts. It covers all the three things you mentioned. When it comes to revenue generation, you will agree with me that Nigeria Revenue Service in 2025 generated revenue that has not been the record of the country compared to what they have been generated in the past. Number two, when it comes to economic inequality, you see, when you have a good tax regime, when the taxpayers, organization, individual knows what they want to pay, what we see is that there is a tax fairness. There is clear to the payer and it's clear to the administrator, because both understand what is due to be paid to the government and the tax administrator knows what to be assessed. For example, the income tax, when you are any company income tax, when you are earning less than 100 million, we know that you won't be assessed to tax, but you also need to file your tax because you are regarded as small-scale entity. But we pray that a small-scale entity needs to grow. So we need to have your data. And that is the reason why the Nigeria Revenue Service actually loves the model being deployed by invoicing system. That invoicing system, we didn't do big blow approach. They are doing it on gradual basis, taking company with billions of naira, connect their system to the Nigeria Revenue Service system. By that, there is no discrepancy, there is no disagreement. You that sold worth of goods of 200 trillions, you know that you will be assessed to tax. Revenue Service have that data, you self have that data. It creates a fairness, you pay a fair portion to the government. The only thing that we encourage our government to do is that when we are getting the tax, let's see the outcome of that tax that we are getting. Let's work on the state government to use the 3 times or 2 times revenue they are sharing now to do good things to the citizens. With that, I will say that all the 3 components you mentioned have been captured in the Tax Act, and the Nigeria Revenue Service are working towards that area to ensure that we have big revenue and equality across board. The role to be played by tax policy has been enshrined in our 2025 Tax Act. I want to tell you that Tax Act, we may have review, but not very soon, because there is a lot of robust policy enshrined in it. Now, to investment, it attracts a lot of foreign investment because the incentive we talked about in the other question, the Tax Act takes care of some incentive for an investor. And you will see that compared to the past regime, the investor coming to the country, they are shining in their numbers. And to see the effect of this will be around 2028, 2030, where you will see that we have a lot of investors. Because our Tax Act is clear now. It's not that this act is saying this, the other one is saying that, and we have 20 years Tax Act that have not even been reviewed. But now we have a current tax policy that guides the investor that doesn't know anything about the country, and that guides those who are the tax administrators. So the Tax Act have encouraged and boost investors' confidence to come to this country. We have a lot of things that is affecting organization. But when we start from good staff incentive, you will agree with me that many organizations do not remunerate their staff well. As a result, there will be some theft, some fraud in that organization. As a result, that organization will want to change government by not paying the relevant tax they need to pay. By not having good corporate governance, because in tax, you can avoid tax, but you can't invade tax. Avoiding tax is to look at mechanism to ensure that there are some incentive you can inch on by reducing your tax exposure. I've done that. Many organizations can do that too, where you see that when you train your staff training now, when you build their capacity, you can claim it as expenses, not doing party that it cannot be allowed by relevant tax authority. So finally, many organizations do not keep their proper books of record. Maybe as a result of the fact that they did not employ a qualified chartered accountant by Institute of Chartered Accountants of Nigeria. You know, maybe they decided not to pay well. In all, when you did not have good record, there will be disagreement between you and the tax regulator. I mean, the tax administrator, because you didn't have a good record, and it will impact in the organization future. Should you want to access BOI loan, there is no financial statement to speak to that. Should you want to access other government incentive, there is no financial statement to speak to that. In fact, 80% or 60% of Nigeria organizations, they cook their book. But the tax administrator also now knows how to walk back. In fact, it should be said to organizations, if you cook your book till tomorrow, the tax administrator have what they need to put. The moment they have your BVN or registration number, the system will pull out all the bank details you have. So there is no place to hide, rather than to come in clean and look at the tax act where you can reduce your tax exposure, but paying tax is key and it pays to pay your tax.
Over to Swateku for what's on the net.
Good day and welcome to What's on the Net. My name is Joyce Wateku. At Ojo Olatunji is asking, how much is it to get OTP for Tax Promax registration? Please tell me. I have been submitting and resubmitting applications, and Tax Promax said OTP has been sent to my email, but nothing was sent and the bank won't open an account for me. Yes, my email is correct. For Tax Promax registration, obtaining an OTP is free. There is no charge to receive it. If you are not receiving the OTP in your email, check your spam or junk folder. Sometimes emails are filtered there. Ensure your email is correctly entered in the Tax Promax portal. Try resending the OTP after clearing your browser cache or using another browser. Contact NRS support directly if the OTP still doesn't arrive. You can reach us via the NRS help desk or official support email. Do not attempt to pay any third party claiming to provide OTPs. This should always come directly from the NRS Tax Promax system. Angela is asking, how do I find out if I owe taxes to the NRS? Contract/inheritance. Do you pay taxes? Myth or facts? Let's break it down clearly, Angela. For myths, contracts themselves are taxed directly. Inheritance is automatically taxed when received. But the fact says, income earned from contracts like consulting or business deals is subject to personal income tax or company income tax, depending on whether it's individual or corporate. Nigeria does not impose inheritance tax. However, if you sell inherited property, the profits may be subject to capital gains tax. Over to you, Laurie.
And that brings us to the end of this episode of Tax File. I hope you're walking away with fresh insights and a clearer understanding of tax matters that affect you. But remember, the conversation doesn't stop here. Connect with us on social media. We are always ready to hear your thoughts. Until next time, I am Laurie Bala Hassan. Stay informed, stay compliant, and keep watching Tax File. NRS, together we rise, together we prosper.